Canada is working against the clock to prevent the United States from imposing tariffs on $20 billion worth of its exports. The impending deadline has heightened tensions between the two major trading partners, threatening to disrupt integrated North American supply chains. If these tariffs go into effect, they could significantly increase costs for businesses and consumers on both sides of the border. Trade negotiators are actively engaged in discussions to resolve the underlying disputes and avert the economic penalties. The outcome of these high-stakes talks will have major implications for cross-border commerce and the broader global trade landscape in the coming months. In major geopolitical and economic news, the United Arab Emirates has officially suspended all trade with Iran. This drastic measure comes after the Emirates reported that Iranian forces fired missiles at the Gulf state. The trade suspension marks a severe escalation in regional tensions and is expected to send shockwaves through Middle Eastern markets. The abrupt halt in commerce threatens to disrupt established regional supply chains and could have significant ripple effects on global energy markets. International leaders are closely monitoring the situation, as further escalation could deeply impact global trade and economic stability in one of the world's most critical strategic regions. United States semiconductor stocks are experiencing a significant downturn today, sliding as government borrowing costs reach their highest levels in several years. The surge in bond yields is putting downward pressure on the technology sector, as investors grow increasingly cautious about the high valuations of major chip makers. When the cost of capital increases, growth-focused technology companies often face stronger market headwinds. Financial analysts are keeping a very close eye on the bond market, warning that further increases in borrowing costs could continue to weigh heavily on both the tech sector and the broader global stock market.